Hey traders, welcome to the Forex Market Analysis session. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. And in today's video I want to show you the 4 trading setups that I'm looking at for the next week. I will tell you exactly how these setups were identified, and I will also show you the way I'm going to execute the trades based on these patterns, and how to manage these trades if it is needed. And now let's go. The first trade that I'm looking at is this pound yen 4 hour. Okay, the completion of the pattern is this. Oh, sorry. 107.15.3. This is the completion of the pattern, and this is the invalidation of the pattern. 107.98.7. So what is the plan? How I do trade these setups? I actually do it this way. I wait for price to enter my reversal zone marked by this 2. I do not place any limit orders. I don't trade them aggressively. I wait for some candles to appear, and if it goes through my reversal zone, then no trade is here. But if price give me some reversal like this, like this, yes, these candles, then I enter after the reversal happens. Stretch some Fibonacci from the low of the pattern to this reversal, and this will be my target to trade to. Next, after the reversal happened, I also have this number. It tells me how much should I risk in pips. Okay, and it is very important number here, and because it turns everything upside down. First of all, this is the number of my potential take profit. Why I call it potential? Because I assume that the trade will start reversing exactly after the completion. Yes? So by default, it should start exactly at completion. And if we measure that distance, it is exactly 72.8, 73 something, 72.5, 72.8, my software says. This is the exact completion of that. And if this number is less than this number, this one is the 3 ATR distance, then we need to switch. This means that this time frame is too large, and if you will wait for some candles to show you a reversal, you'd rather miss the opportunity. So switch to 1 hour like this. And now it looks much better. Now you see that the stop loss is 47.3, yes, and the take profit is 72.8. And if the reversal happens here like this, and then we have a reversal like this, if the reversal happens here, then we will have a take profit of 61.1, and the stop loss will stay 47.3. The stop loss is almost the same, 47.3. 47.3. So starting from the entry, not 47.3 to the high, but to the entry, 47.3. And if price goes higher and higher and higher, for example, the reversal takes place here, of course the stop loss will go simply higher, and the Fibonacci will go higher as well, and the take profit will be what? This time 68.0, and the stop loss stays the same, 47.3. Okay, hope you understood this. Wait for price to show a reversal. The second trading opportunity 4 hour. Let me enable the recalculation mode. Okay, so this is the pattern that I'm looking at. This is a potential Gartley formation, I suppose. So I am waiting for price to go into this zone, to enter into this zone. The beginning of the zone is 1.39930, and the stop loss of that is 1.41161. I said the stop loss, but it doesn't mean that you should place your stop loss limit at here. It is simply the invalidation of the pattern. So again, guys, the execution, how it goes. First of all, find the appropriate time frame for that. The take profit says it is 1075, and the stop loss distance says 1398. So it means we have to switch into 1 hour time frame. Okay, now here it is. It is the button. When we switch the time frame, the patterns are calculated based on that time frame. That's why we need to switch that off like this. And if we switch to 1 hour, the pattern stays. Yes, very convenient to have that button. Okay, so the initial stop loss and the initial take profit is placed here, somewhere here. Again, what we are to wait, what I am waiting for. I'm waiting for these candles to appear, enter into this zone, maybe here, and then I'm waiting for a reversal candle to appear, something like this, and this will be my entry, and my stop loss will be what? 57.5. Okay, 39, 57.5, and this should be 39.0. Okay, perfect. This is my stop loss. Let me zoom it out. Okay, no, let me zoom it in. You see this? Depending on my entry, it may go here. Yes, it may go here, like this, something like this. Well, but it should not exceed my highest limitation, the highest limitation of the pattern. Simply pay attention for that to stay within the range. It should not exceed this highest point. The stop loss itself may exceed, but the reversal should take place below that. Well, next trading opportunity is the Aussie dollar. Let the chart load. Let the 4 hour to be calculated. Okay, here are the two trading opportunities. The one is this one, yes, and the second is this one. So if price starts the reversal here, we can have some pips, and if it reverses, goes higher, we have a second opportunity to get the pips. So this one is the first, this one is the second. Both of them can be winners, both of them can be losses, or maybe one of them is loss and the second one is winner, and vice versa. The first one is a loss and the second one is a winner. Sorry, the first one is a winner and the second one is a loss. Let's look at some numbers. As for the first pattern, it should be executed 54.2, and we have 92.3. Should be executed on 1 hour, 35.5. Let me switch that back and switch it off. So this is the pattern. It didn't yet complete. What we have right now, we have price consolidating just below this entry level, you see, and it is a warning sign. First of all, you should keep in mind the price action within the CD leg. This is the C to D leg, the last leg of the pattern. First of all, the warning sign is the tail close. the candle that has a close just at the tail close. Then you should keep in mind the unusual large candles, large expansion ranges. So we have this candle being pretty large. And another stuff that you should keep in mind is the consolidation just below your reversal line where the price should reverse. Typically when we have that kind of consolidation just below some resistance level, we then break that to the upside, and the previous movement is calculated as one-to-one measured movement to this area. So this means that the reversal may start a bit higher. So that's why placing limit orders is not that useful. You may use that in some additional situations, but if your projected reversal should take place here, why should you enter lower? Don't be afraid to miss the opportunity. You will have plenty of them. The opportunities appear again and again and again. Don't be afraid to miss them. Next is the Aussie New Zealand. Aussie New Zealand, and it is 4-hour time frame. After this cipher 1, now this is a Gartley pattern setting up. Here's the reversal area 107.903, 108.47.2, and let us look at the time frame. And take profit says 49.7, stop loss says 86.2, so we should switch into lower. So it is 43.1. Oh, guys, disable that and then switch. 49.7 versus 43. Now the 1 hour time frame is okay. So here's that logic of this pattern. This is the range. Wait for price to enter the zone and then wait for reversal to happen. Only then stretch your fibs and execute your trades. Somewhere here. Yes? So this way you will have what? You will have your take profit this way, and you will have your stop loss 43.1 if you use 3 ATR stop loss as I do. 43.1, 0.08, 43.1, 0.08, like this. So your stop loss will be this way. In case your stop loss is larger than your take profit, I do it this way. Let me delete this one. I do it this way. For example, the reversal started and this confirmation candle closed lower than my allowed take profit. You see, if I enter here, this means that my stop loss will be larger than my take profit. So what I do, I simply place a limit order somewhere here, and in case price pulls back to the upside, triggers my order, and then it continues the downside movement, I have always at least 1-to-1 risk to reward. Well, that's it, the 4 trading setups for the next week. Pound dollar, dollar yen, Aussie dollar, and Aussie New Zealand. Well guys, hope you like this video. If so, give me your thumbs ups. If you are interested in my software, you are welcome to visit my website www.ps-software.net. Click on that home page and you will find the video introduction, and you will find the demonstration video, pretty important videos to watch. and you will find the variations of the software that I have, the MPS Pro, MPS Automatic, and MPS Manual. And also you have some free stuff, the free real-time trading videos. You can also watch them, real-time analysis videos, pretty many educational stuff here. It is absolutely free. And if you are interested to identify the patterns, to learn the rules of how these patterns are identified, just click that Learn the Patterns tab, go to whatever pattern you are interested in, and you will have a trading course on how to identify this pattern, how to execute your trades, and how to manage your trades. So very, very detailed trading course that is available absolutely for free. Simply register on my website and you will have the access to all that information. And until then, I wish you good luck and hope to see you next time.